There are only three things in this world with that kind of unconditional acceptance: dogs, donuts, and money. Only money is better.
Forbes and Bloomberg both publish lists that detail and rank the richest people in the world. These are the business's most popular publications, and for good reason. Forbes and Bloomberg both want to be the brands people think of when they think information for rich people and about rich people. And what better way to market that idea than a list? People like top 10 lists, and people like reading about rich people. It's no wonder that there are endless copycats out there tracking everything from the richest influencers to the richest chefs. The top Google search terms for most celebrities is their net worth. People just have an inherent need to provide a nominal scale to someone's success. And as a society, how much wealth you have managed to accumulate is about the most universal benchmark we have.
A lot of people wonder how we compile the Forbes Billionaires list, and it's a massive, massive undertaking. It takes many dozen reporters, many hours to track down all of the world's billionaires.
But if I asked you what your net worth was, you probably wouldn't know. And the only way you would accurately be able to find out is by accessing a lot of personal financial information. So how do the reporters from Forbes, Bloomberg, and TMZ work it out? Well, it's time to learn how money works to find out how these lists are made to expose the financial details of people who would probably rather keep it private. This week's lesson was sponsored by Finimize. Finimize is an app that helps you become a smarter investor in 10 minutes per day, delivering all the insights and tools you need to make smarter financial decisions. From a former investment banker to you, let me tell you this. Understanding a company's financial statements and fundamentals is the easy part. But getting a holistic picture of an industry and the economy at large is a different story. Finimize has your back, providing you with bite-sized, jargon-free information in a fresh and easy-to-read format to help you make smarter investment decisions. If you prefer listening to an article, you can do that too. And after you finish, you can recap with their key insights. I recently came across a story about the dollar milkshake theory, which sounds like a sweet treat, but was actually an important thing to consider in regard to the economy. I don't have time to explain the whole theory, but the general idea is that there aren't enough US dollars created to meet the global demand, leading to the rise in the price of the dollar, leading to defaults abroad because global debt is denominated in the dollar, leading to a global financial crisis. These stories aren't meant to be direct financial advice, but rather little pieces of the puzzle that all work together to make you a smarter investor. The more stories like the one on the dollar milkshake theory that you know, the more things you will keep in the back of your mind when investing. Best of all, this is all written and curated by world-class analysts who previously worked at Goldman Sachs, HSBC, and Barclays. I open Finimize every morning for their morning briefings, and so should you. To get started, click the link in the description to get a 7-day free trial of Finimize and 40% off, and you'll be on your way to becoming a smarter investor. A quick refresher for those of you who are unsure. To work out someone's net worth, you take all of their assets and subtract all of their liabilities. Like most things in finance, the math is deceptively simple. The hard part is getting reliable data.
I would pose the question as a challenge, like, are you ready for this much data?
Ask someone on the street how much debt they have, and you would be lucky not to get your ass beat. Now, try to ask the same thing to a billionaire, a class of people that are very protective of their privacy. Good luck. This gets even harder for people like hedge fund managers. Ray Dalio, Jim Simons, and David Shaw are all American multi-billionaires that are frequently in the top 100 of these lists. They are definitely rich men, but on a day-to-day basis, they probably wouldn't even know what the asset composition of their firm is. Their trading strategies rely on frequently trading in and out of positions based on suggestions from their advanced algorithms. If they don't know what they own, what chance does a journalist? Bloomberg most likely publishes the most reliable list, and they also publish the methodology they use to come up with their numbers. Bloomberg is first and foremost an information company. Their primary business is selling market data to firms operating in financial markets. Whenever you see clips of trading floors with dark screens full of charts and data, you are most likely looking at a Bloomberg terminal. Bloomberg News and the Billionaires list is just a marketing tool that used to sell more of these terminal subscriptions, which, by the way, start at $24,000 a year for a single user on a standard license. In my experience working as a banker, Bloomberg genuinely does have the most reliable data and rigorous methodologies. For big finance firms handling billions of dollars, this subscription is a small price to pay for all of their analysts because the data that Bloomberg provides is the industry standard. If anybody is going to have an accurate list of billionaire wealth, it's going to be Bloomberg. The Bloomberg Billionaires Index is updated every day at the close of stock trading in New York City.
Literally, a new billionaire was created about every 26 hours. That is not normal. That's actually quite frightening, and it's frightening on many levels.
They do this because the wealth of a lot of billionaires is very strongly correlated with large publicly traded companies. Some net worths are very easy to calculate. Public company founders normally source the majority of their wealth from the value of the shares they have in their companies. Jeff Bezos, for example, owns slightly less than 10% of Amazon.com Inc. So if you take the market capitalization of Amazon, divide it by 10, add in some well-documented asset purchases like his mansion, private jets, and space company, you can get an accurate picture of how much he is worth. Anybody that controls between 5 and 10% of a publicly traded company must report themselves as a beneficial owner and file a Form 13D or Form 13G. Any greater than 10%, and they must file a Form 3. The SEC requires this filing because people at this level have the power to influence share price with their purchasing power and their reputation. The SEC wants to make sure that the stock market is a level playing field for everybody.
I do not respect the SEC. I do not respect them.
So large investors need to make these filings to ensure that everybody is working off the same information. They also want to know the intentions of the new shareholder. If they file a 13G, they're a passive investor along for the ride. But a 13D could mean they want to change how the company is run. A cool feature of a Bloomberg terminal is that you can look up these filings by individual and get a full list of every company that they have more than 5% stake in. You can also do it on the SEC website. But it's not as simple. That's how Bloomberg would work out the fortune of someone like Bill Gates, who has actually sold off most of his shares in Microsoft and has diversified his investments into multiple companies, including his longtime friend Warren Buffett's Berkshire Hathaway. By looking at the holdings of Cascade Investments, Gates' private investment firm, which is dedicated to managing the wealth of him alone, Bloomberg can make a list of the companies he owns, how much he owns of each, and the market value of those investments at the end of the day. Bloomberg has also reported on Gates' alternative investments outside of financial markets, like the 270,000 acres of farmland he now owns in addition to his home in Seattle, a $50 million manuscript written by Leonardo da Vinci, and a collection of other known assets. The number was made by adding all of these up and then subtracting $20 billion, which he had pledged to his charitable foundation but has not yet paid to. Unlike a certain actress, Gates has a good reputation for following through on his pledges to charity. American billionaires with publicly disclosed investments are easy. With all of the information that Bloomberg has access to, they could get a first-year intern to bet out an accurate estimate for these guys. But it got a lot harder for billionaires that made their fortune through tightly held private companies. A non-publicly traded company does not have the same reporting requirements as public companies do. There is less risk that average investors will get involved in these businesses, because they are not available to buy with a Robinhood account and some birthday money.
So you can
basically we're betting if it's going up or down.
Okay, yeah. So if you're buying options, there's calls and puts. A call is betting on the price to go up, a put is betting on the price to go down.
But how do you value something like Kylie Cosmetics? The Kardashian-Jenner family controversially claimed that Kylie Jenner, the face and/or lips of the Kylie Cosmetics company, was the youngest self-made billionaire thanks to her majority ownership stake in the beauty business. Self-made might be a bit of a stretch, but what about the net worth figure? Kylie's business is undeniably very valuable, but not very liquid, meaning it would be very difficult for Kylie to convert that business into cash immediately. Not only are the shares in the business not publicly traded, the value is also highly dependent on Jenner's continued involvement in the company. If she is not posting on Instagram about her pain on lips, sales would likely suffer, reducing the value of the company. Jenner is no longer considered to be a billionaire by most reputable publications covering net worth, and even if she was, she would not be wealthy enough to appear on the Bloomberg Index. She would need to be a billionaire 5 times over to make even the bottom spot on that list.
Her net worth has fallen below $1 billion. In other words, Kylie Jenner is no longer a billionaire.
Jenner's net worth, however, is not unusual. Bloomberg has a very particular framework for measuring the value of tightly held companies. They compare the company to publicly traded companies of a similar size in a similar industry and give a rough valuation based off that criterion. Bloomberg then subtracts 5% of the estimated value as a liquidity adjustment because it can be very hard to sell private businesses, and it often involves paying fees to an investment bank for facilitating the deal. An additional 25% is subtracted if their business has significant key man risk, where one individual, most likely the billionaire themselves, has a disproportionate influence over the success or failure of the business. A good example of this would be former President Trump. Love him or hate him, his personal brand is worth a lot of money in certain markets. In the event he was removed from these businesses, it's unlikely that something like Mar-a-Lago could continue to charge $200,000 a year in membership fees. Hedge funds and other alternative investment vehicles account for a large share of the names on the Bloomberg Index, but pinning down how much these funds and their managers are worth can be tricky. The way the Bloomberg Index does this is by looking at the value of assets under management in the fund. They find this through ADV forms lodged within the SEC. An ADV form is a requirement for funds with more than $25 million, which lists the details of the funds like who the key officers in the firm are, and most crucially, how much the assets the firm invested on behalf of their clients are worth. This isn't a perfect strategy, because the value of something like Jim Simon's Renaissance Technologies would be significantly higher than another fund with $130 billion in assets under management because they charge higher fees, make higher returns, and spend less money on expenses. Bloomberg themselves admit that this isn't a perfect science. Assigning value to a business can be a very complex process, even if you do have access to all their financials. Without those, a rough guess is as good as you're going to get. That's why the Bloomberg Index includes a star rating to indicate the confidence the publisher has in the net worth figure on their list. 1 star indicates that their fortune is in companies and assets that are impossible to accurately value, and 5 stars means that the individual's wealth is entirely in liquid publicly traded companies with verifiable up-to-date valuations. Which brings me on nicely to the last challenge with working out how much someone is worth. A lot of wealth is not kept on public record, and even if it is invested in private companies, it only gets attributed to an individual if they own more than 5% of a company. A well-diversified portfolio wouldn't need that much invested into any one company, which makes it possible for multi-billionaires to exist without being detected by this index at all, which is probably just the way they like it. This also means that things like celebrity net worth predictions are completely unreliable. None of these techniques that Bloomberg uses would work on a celebrity reliably, and most would get a 1-star rating on their index. Celebrity net worth sites are not going to be as rigorous with their data as Bloomberg is. These figures are basically just guesses. But there is also one last very simple way that Bloomberg compiles their index, which can help with trickier cases like this. They ask. Every billionaire on the list is contacted directly through the representatives to comment on the validity and accuracy of Bloomberg's wealth estimates. Most choose not to comment, but some will try and adjust the figure up or down. I don't believe any billionaires would do this in the interest of journalistic accuracy, so any adjustment requests are likely made to suit their public image as being wealthier or not as wealthy as it would look. Most likely the latter, from people who want to fall off the bottom of the list to avoid the public attention. There are lots of people that should be on this list that are not. Michael Bloomberg himself, estimated by Forbes to be worth $77 billion, does not show up on this list because Bloomberg has a policy of not reporting on their own company, which includes their founder, CEO, and namesake. Another group that doesn't appear on this list, but definitely should, is the Porsche Piech family. They own 100% of the voting power and 50% of the company that owns Volkswagen and many of its subsidiaries. Despite their enormous fortune, they have managed to stay off that list with clever corporate structuring. If you want to learn the story of how the Porsche company went from making tanks to cornering the automobile industry while narrowly avoiding bankruptcy multiple times over, then go and watch my video over on my new channel. Thanks again to Finimize, an app that helps you become a smarter investor in 10 minutes per day, for making it possible for everybody to keep on learning how money works.
Ha 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 ha!